Test, test, test. All right. Hey, welcome everybody to the 40 Finance channel. My name's Geoff Beers. Doing a live stream today. Thought I'd hop on. I didn't have time to do a video this morning because I was running about. And one of the things I actually did today was get my vaccine. And I got the J&J Vaccine at a Walgreens here in Cincinnati, Ohio. And I'm still alive. So, we'll see what the side effects happen over the next 24 hours, but I at least survived the first little bit of it. And I just thought I'd check in with folks and maybe look at J&J stock for a minute while we kick this off, give people a chance to ask questions and all that stuff. And then, we'll go from there. So I'm going to kick today off with a little stock market overview, and then we'll jump into J&J stock since it's sort of a special edition, if you will. Type it in. I also have some GBTC news too. You probably got a preview there. So anyway, just for fun, I'm going to show J&J stock since I did get their vaccine. I was thinking about their stock today while I was waiting in the waiting room. And really when it comes to healthcare stocks and drug stocks, pharmacy, all that stuff, this is one that I'd have to say you should consider for a number of reasons, really all separate from any kind of COVID talk. But if you go down to, this is the past year for J&J, obviously it's healthcare, so it didn't have the huge upswing that so many other stocks did in the tech space and whatnot. But you got a PE today of 29.35, EPS of 5.51, and most notably, the dividend of 2.51% as of today's price. So a really good long-term value play. You see off to the earnings column here. They have hit 4 for 4 out of their last 4 earnings. And really the climate for healthcare, the most profitable portions of healthcare, if you're not familiar, are things like routine procedures, optional procedures, things like that. And that game is coming back into play, right? So if you had, trying to think of something, if you had an optional procedure you were pushing out for a long time, say a hip replacement or something, because of the situation we were in with COVID, that world's coming back. So they're expecting a pretty big rush in healthcare here in the United States anyhow. So, keep an eye on healthcare stocks. Back to J&J though, you see revenue and earnings over the past few years, and it looks like 2020, this says 2021, but I think it should be 2020, $14.7 billion in earnings. That was actually down a hair from the year before. But if we go to the statistics tab, try to get a feel for where is J&J trading today compared to where it has historically. And today's price is really spot on. If we just look at the PE, right? So you've got an existing or a trailing PE of 29, forward of 17. That's right in line with what you would have paid for J&J way back when, going back to, at least from a forward PE standpoint, going back to 2016 and perhaps even beyond. And you take a look at this company, $82 billion in revenue over the past 12 months. Quarterly revenue growth looks good. They've got $25 billion in cash, which was pretty incredible. Relatively high debt load at $36 billion. But with that, it takes a lot of research to do these things, to invent medical technology. So, I didn't look at it very closely, but I would say that the combination of $82 billion over 12 months, $25 billion in cash. I would say their debt load's in pretty good shape, at least manageable. When we look at what analysts are thinking, last year, $8 EPS, this year $9.50, next year $10.31. Revenue side, jumping 11% this year from 82 billion to 92 and then to 96. So you have some growth coming. It's not the spectacular growth we're all used to when we think about tech stocks and whatnot, but J&J definitely has a value proposition to it for long-term stockholders. For myself, I know that I have exposure in my dividend ETF that I keep in my IRA. So that's where I have my little snippet of J&J. It's not a standalone stock for me. Most of my standalone stocks I'm looking at, I need to see double-digit growth if it's going to sit in my taxable account. That whole purpose of that account is to grow, as quickly as possible while mitigating risk. So I haven't seen the need to put that one in there. And frankly, I kind of stay away from healthcare on standalone stocks because I just don't have that type of background. All right. And I'm going to investigate really quickly because I see the live chat does not appear to be on. So allow live chat, okay. Well, it looks okay. If anyone's on, you can ping me, just put a hi or something in there to make sure that it's working. Sometimes I know YouTube has problems. I'm going to go look, see what it looks like on the live screen. Oh yeah, so the chat is working. It's just I can't read it when I'm in my YouTube studio for some reason. So I will get to chat questions. I'm glad you guys are in there. And I'm going to jump ahead to the next topic, and then I will answer questions. So the next topic for today, oh crap, I was going to cover Pfizer really quick as a comparison. So I want to do that just so I'm being fair and not looking at just J&J in a bubble by itself. You always want to compare against other stocks. And Pfizer, of course, probably has the next most popular vaccine. And when we look at Pfizer stock, you have a lower P/E ratio of 21.58. You have lower EPS of $1.71 a share. I think that dividend is higher, 4.26% on today's price, but it's only $1.56. But if you're looking at the two, you can see Pfizer's missed EPS in Q4. And then when we go down to their financials, they've had a little bit more of a roller coaster ride than J&J, at least in the past couple years. Remember, J&J was flat to up over their recent history. Let's look at the statistics just so we do apples to apples. Switch to annual. Trailing PE, definitely, well, mixed bag on trailing PE for the past few years. Forward PE probably matters even more, or it does actually matter even more. 1147, that looks to be lower than we've seen for quite some time, lower than all the way back to 2012. So good signal there from Pfizer stock as far as offering a historically low forward PE. And even the PEG ratio looks pretty solid compared to its historical norm. This company made $42 billion in revenue in the last 12 months. And they've got $12 billion cash on hand, $41 billion in debt. But I think between, just like J&J, $42 billion plus $12 billion gets you into the 50s, which is more than the debt you hold on hand, which to me is just a positive sign. On the analysis side, looking ahead, this year looks to be a good year. Last year they landed at $2.22. We are at $3.31 as the estimate as of now. and drops a little bit to 304 next year on today's projections. And then you see on 2021, Pfizer is actually expected to have a big year. $42 billion last year, up to $62 billion, and then next year, $53 billion. So I don't know. I guess you just have to pick your flavor. I'll take the slow and steady pace of J&J. There is potentially an argument here with Pfizer. If they hit anywhere close to the 48% growth in revenue this year, that would be, you know, a very bullish sign. What sucks though is if you don't get out in time and they do go down 14%, or you're not wanting to hold for long term, then you could get wrapped up in a little bit of a demise in 2022 because their earnings reports will show negative growth, and that's always frowned upon on the streets. Okay, last of my soliloquy for the day is an interesting happening for Bitcoin Trust, GBTC. And somebody actually sent me an email about this and was calling out like, hey, I think GBTC is actually trading at a discount to Bitcoin right now. And the person provided some calculations. I looked them over, and I did not do calculations today, but as of Friday night or Saturday, it was correct. And I can't vouch for this site I'm about to show you. Hold on. Let me adjust it so you can see what this site is a little bit better. Got to look at me for a second. All right, so it's this, daggone it, I didn't get the top. Here we go, BitBoo. All right, now, I don't know anything about BitBoo, but I come here all the time. And that is because they do these extensive Bitcoin price calculations that they bleed over into ETFs and such. So long story short, I'm going to scroll down here. Closed-end funds, okay, GBTC price 51.64, GBTC premium minus 8%. So right now you are getting more Bitcoin per GBTC share you buy than you are compared to the up-and-comer OBTC. And some of these other ones I don't know. So QBTC, I don't know that one. I'm not going to pretend to. But what we have here is just a very interesting situation for GBTC. So if you were thinking about purchasing this, as you guys know, I own it. I have a full review of it on the channel. But I guess I'll leave it by saying, if you are interested in purchasing GBTC, as a, let's call it easier way to hold Bitcoin in your stock market account, as opposed to holding individual Bitcoins in a separate wallet. And then obviously at the end of the year, if you're trading Bitcoin, you have to calculate all that shit by yourself. But if you keep GBTC or OBTC in your stock market trading account, then all of the numbers are run for you in your end of the year report. So you don't even have to figure out what the heck's going on. So just keep that in mind. I thought it was very interesting. And again, I'm using a website there, BitBoo, that I can't tell you scientifically is 100% accurate, but I have no reason to believe it's not. I followed it for several months now, and it always seems to be about spot on. So I'll call it close enough. But all right, so that's my stuff for the day. Now I have to do chat a little differently today because it's not getting pulled into YouTube Studio. So I have to go live to my YouTube page. So let me bring this over so I can see it a little bit. All right, LD, how you doing? Good to see you. Fahad, how you doing? Good job. You guys are saying congrats on the shot. Thank you. And one thing I want to be very, what's the word I'm looking for here? Like, I just want to, I know that there's a lot of you who are in other countries that you don't have access right now, like I'm fortunate enough to have. So I'm not wearing this, not trying to show off or anything with shots, because I think that it's very unfortunate in the world that not everybody has been able, their countries have not been able to form the infrastructure to get it out to people. And I really am pulling for all you, if you live outside the US, that your country gets it together and finds the resources. On a really terrible news that I read today was that China has said that the vaccine that they rolled out to a significant number of people may not actually be that effective. Check your news headlines. Don't get that information from me. But I saw it on the front page of Market Watch that the health minister something of China was concerned that their efficacy rates were not as high as they wanted. And that's just like the struggle for the world right now, is trying to come up with a solution. And I just hope that everybody has an opportunity to take advantage of it. Here in the United States, everything was reserved for the elderly, basically. And I'm sure other people who had health conditions. So like, it's only very recently in the past 2 weeks where I live in Ohio that somebody in my age group would even be eligible. But to be fair, I was very lucky because I went to a freaking Walgreens right down the street, and it literally took like 15 minutes. So I hope that everyone has that opportunity soon. So I just wanted to say that because I don't want to be one of those people who's like, hooray for me and whatever, because that's a little lame. All right, Ben MT would like to talk about fuel cell. Ben, I did something about fuel cell last week, I believe. I had it down as a little too expensive for my taste. Let me see here. No, I'm thinking of a different one. I forget who I did the other day. Fuel cell. Let's pull it up. I'm going to transition away. 1 year, fuel cell energy. Oh, I did plug power. That's what was on one of my recent videos. Now, fuel cell, they are, I like to read the little description because I can't keep all these companies straight. Fuel cell energy designs, manufactures cells, installs, operates fuel cell power plants for base load power generation. Okay. And what I'm seeing, just eyeballing it, is you have one miss on earnings. Oh, wait, they hit, missed, big miss. So it looks like they're struggling on their forecasts at the immediate term anyhow. And you've got a stock that peaked around $28 and now you're down to $11. As far as analysts go, you're expecting, we better just focus on sales for this one, 13% growth this year from 70 million to 80 million, jumping to 120 next year at 49.7%. Just so far, I would say, I don't think TipRanks covers this one. Okay. TipRanks does not cover it in terms of the best performing analysts. It's only showing all analysts, and we have no, let me refresh this. Oh, I have to take out the best performing analysts. Okay, so 13 days ago, you got 1 month ago, somebody came in at sell, then hold. All of these people are unranked analysts, so they doesn't mean that they're bad, okay, just to be clear, but I typically sort by the best, right? Because I want to have a reading from somebody who's at least has a historical background of success. Can't do that here. Eyeballing it from this point, I'm going to say you probably have time to pick this one up, meaning I wouldn't be in a huge rush. I don't know a lot about fuel cell and how their company is structured, so I'm not going to pretend to know. But just the basics that I saw there, I would say you have time to either average down or just flat out wait for a bigger dip. You're at 1138 today, and it just sounds like 2022 is a better year for them. 2021 is a mixed bag, according to analysts, and so I don't know. It's hard. It's not one I'm interested in, but that's my 2 cents on it. All right, LD's VFF lost nearly 10% due to, oh yeah. So let's look at that one, because I appreciate the email you sent about that too. Village Farms, very intriguing in terms, and just so everybody's on the same page, Village Farms produces, markets, distributes greenhouse-grown tomatoes, bell peppers, and cucumbers. They also, I'll try to skip down here, they also operate a power plant and sell hydroelectricity to British Columbia. And they market and distribute products under the Village Farm brand, cannabis products under the Village Farm brand. So LD's been high on this stock for a while. It does have a positive EPS, and you can see that it has come off of their highs a little bit, down 10% today. High was 19, down to 11. And I looked at it and I thought that there were some positive signs. You get a lot of this, which is there's really no analyst covering it. I meant to check in TipRanks though, see if we got anybody doing it in there. Yeah, if we go to all analysts, it's probably going to be a lot of those unranked guys again. Yeah, unranked. But you've got 1 month ago, you got 20, 26, and around 18 is what these folks are saying. It's going to be similar to fuel cell for me. I'd like to see a little bit more expertise coming in on it. But if you've dug into it like LD has, because I got email with all the background research, there's some interesting plays. And I also really like on this company that they're multi-pronged, right? So whether you take the greenhouse grown vegetable line, which of course is going to be preferred as the world continues to work towards organic and all that stuff. The hydropower I know absolutely nothing about, but you know, that could turn into something. And then obviously the bigger play is the cannabis play. So, you know, I think with cannabis, the way my mind goes, I don't have a horse in the race right now. The only way I would is if one of them got big enough that perhaps ARC or QQQ or somehow they landed in one of those buckets in my ETF. But for me right now, I'm staying out of cannabis because I have a hard time figuring out who's going to win, right? And I want to be with at least the top 2 or 3. So whatever you choose in that niche, I would research very long and pick 2 at the max who you think are going to win. And you have to have your own reasons why. And then you hold it, like probably for a minimum of 5 years at this point. That's how you got to play this game, and you just got to keep watching and hope that your horse keeps producing, because I think there's going to be a lot of roller coaster rides in this industry, not only consolidation, but also I don't think anyone can be sure who's going to win. Is it going to be the material side, right, or the actual farmers, harvesters, whatever you want to call it, suppliers? Or is it going to be a retail win? So obviously financial education has that, I should know this one by now, the Cloud9 or whatever his stock is, that's a retail play. in cannabis that's a Las Vegas store. He's banking on the fact that retail will be the winners, right? In that particular stock that has its own brand name, Planet 13. There we go. So that's one side of the bet. The other side of the bet is resources. And there could be a third side that comes out, which would be more of like the distributor, right? Who can, if you think of like maybe Molson Coors or Budweiser or something, would be the distributor off to retail. That has a chance to win too. I haven't figured out which category is best, so I'm staying out of it. But hopefully that gives you an update on what I'm thinking there. All right, so, daggone it, I thought I closed my thing. JP, how do you feel about Paysafe now the merger is complete? I still feel great, and I'm not selling it. However, I am surprised that it's rolled backwards after things went live. I think today we're minus 5% on $13.15. So this in DraftKings is down to 7%. With me and Paysafe, just to be 100% clear, there's a chance I add more, particularly if it goes to like $10 or something. I would definitely consider adding more. What we're really going to need from Paysafe, and it's going to be a similar story in some ways to what I went through with Rocket, is we need to start getting some numbers on the paper, right? We need an earnings call. We need an earnings release because everything pre-IPO is fuzzy numbers. And like in Rocket's case, it looks like we'll need a whole year of earnings reports is how that one's going. But I'm still in. And the win, again, for Paysafe is not just being a stock market ticker that suddenly garners interest. It is USA sportsbook gambling and stuff growing at an incremental pace and making the assumption that Paysafe partners with a lot of those names, which they already have with DraftKings. So my standpoint has not changed. I'm not selling. I'm disappointed that it rolled backwards after going live. But for all I know, that could just be one of those things like where the stock goes live and those people have a chance to sell out if they were in the initial deal. So I would expect, if nothing else, that come September when football season ramps up and that suddenly becomes the next best sportsbook gambling opportunity, that Paysafe would go up from there. There is a chance that whatever happened in the NCAA tournament, we had Masters this weekend, which is a golf tournament, and we're inching towards the NBA, NHL playoffs. There's a chance those things outperform, but the monster money is college football, NFL. That's the Christmas of all Christmases in sports gambling. May have to wait that long for Paysafe to make a strong move. All right, I can confirm chat is working. It is not working on my YouTube live screen, but whatever. Okay, thoughts on the gains of Alibaba. I do not own this, but I know what you're referring to. So Alibaba got a huge fine from China in regards to their practices with privacy. And, you know, who cares what the debate is behind that, right? Let's just talk about the stock. And my take on this 9.3% increase on, what was their fine? Here's their fine, $2.8 billion. But the stock jumps. I think the reason it jumps is because the case is over. And we know what the damage is now. So since it's a Chinese stock, I'm not sure if we're going to have a ton of info. Well, we got a decent chunk of information here. Alibaba revenue, $98 billion over the last 12 months. Total cash, $70 billion, total debt $23 billion. So they were in good shape to start with. And what did I say that fine was? 2 something? Yeah, call it $3 billion just for fun. They have $70 billion in the bank. So I think they're in great shape. And I think that if you look at it from a historical point of view, this stock is cheaper than it has run in the past. So here's forward PE of 18, and it is well below the forward PE in previous years. PEG ratio, right about even. But yeah, I'm not purchasing Chinese stocks myself. However, I've talked about Baba before that I think that if you're comfortable investing in Chinese stocks, this is the one, absolutely for sure. And the relief that comes from the market. So China, obviously, it's so unknown what the government would do to penalize a company like Alibaba. Now we know, $3 billion. That would be bad news for us, right? But for a company like that, with whatever I said, $70 billion in the bank, gee whiz, I wonder if they'll even notice. And I saw something else that Ant Financial, it will not be connected to Alibaba. It'll be a standalone company, but they're getting close to having resolved the issues with the government there. And I'm sure it'll change the format of the company, and it's not exactly how they would have done it. But however, if they get that done, so if Ant Financial finds its sort of safe place in the government, and now Alibaba paid their fine and they're done, yeah, I would say all good news for Alibaba shareholders. All right, that was for Jared, by the way. 2 a.m. Tom, how do you feel about SDC? I'm still holding. How do you like the current setup before earnings? So SDC, I would put in the Paysafe column. I'm still holding, not selling. Absolutely not selling. And the first time I would consider selling SDC would be approximately Q4 of this year. But even then, I'm not super sure. I will for sure wait for a year to pass to get into long-term capital gains before I drop SDC. I am a little disappointed that it's rolled back a little bit. So that's a double vision of me. That's scary. That's how I had to read the chat, by the way. But let's look at SDC. Just bad momentum right now. And I'll tell you what happened. And kind of went back. Well, this is the market dip. They've got an earnings coming up in May. So their last one would have been in January, guessing, January, February. So they didn't really do anything in earnings. They kind of came out and said, like from a revenue standpoint, like things were still sort of down and there wasn't like spectacular results, right? But what we did get out of them was the points for the future. And those still remain strong. And part of it is twofold. It's a manufacturing process that has been improved on, and the comfort level of their product that goes in your teeth has improved with a new process. So they're going to become more efficient and technically offer a better product. And it's all reflected in analyst sentiment. So you had minus 71 cents last year, up to 26 cents. Could even be profitable at the end of next fiscal year. You see you have a high estimate of plus 14 cents. And then the growth is in the 20s. So it's just one of these ones where it's on bad momentum. And I think what we would really need in May, Tom, is we need to see some progress. Like we need to see like actual sales. My hope is that by the time that May comes around, we are going to see more people seeking out It's kind of like what I talked with J&J. They're seeking out elective procedures, I guess you would say. But in this case, for SDC, they're getting out more, so they're taking care of themselves. And I think the big one for Smile Direct is the concept of your appearance, right? So like, you didn't need to fix your teeth. It would have been a great time to do it. Hell, I should have done it in the COVID time, because you never saw anybody. But now we're getting out. People are going to the beach. People are going back to college. Whatever the thing is, I see things really shaping up nicely for them. I'm not selling. My target price for this one is between $15 and $20. I doubt I would sell SDC until I at least doubled my money, which would be $15 or so. Hopefully that helps. I'm gonna grab a drink here. All right, DNLGBY bought some Alibaba today. Congratulations. Jared, Enphase Energy. Yeah, killer. I talk about it all the time, so I'm not going to spend a lot of time on Enphase today. And I'm going to say this. 150 isn't a bad price. What do we got today? I paid a lot more, and I'm averaging down. I'm about at 180. Unlikely that I will buy any more anytime soon, only because it is worked its way up to like my top, like my third position on standalone stocks. And let me just make sure that that is the case. It is actually number 4, okay? So I've got a lot of Enphase. I still believe in the company. I knew it was a long-term play. Problem is I broke a lot of my own rules and bought that one at $200. And it's okay. I'm down to 180. I'm negative on the stock. I still am sticking to my guns, and I will not sell that. You know, I can't honestly imagine selling Enphase while Joe Biden's president in America, because of the way he is pushing clean energy. And they've just extended, or actually, it's proposed that the existing solar energy tax credits would continue for another 10 years. I don't know if that has been officially signed or not, but that's huge, because it basically gives homeowners, right, the tax incentive to get solar done. And solar is obviously more expensive than we would all like it to be. But with the tax incentive, you probably shave off 3 years or so of getting your money back on an install. So I like it. And I think what's going for it is incremental revenues coming in, incremental earnings are coming in. It has a positive EPS. It has great technology, great patent line. So I'm still in, but I can understand frustration if it hasn't been going your way, because it sure as heck hasn't been going mine. Okay. JP, did you buy anything from Walgreens? Yeah, I didn't. So they gave me a coupon, and so you're getting your shot, and you're filling stuff out. I wasn't paying much attention, but you have to sit there for 10 minutes or something to make sure you don't die. And I saw they gave me a card that was like $5 off, $20 or something. And when I got up from waiting, I was going to buy something with that card, even if it was like some Diet Coke. But it was different. It was like $5 in rewards through your Walgreens app. And I was like, I don't know. I'm a real simple guy. I don't need 27 apps to fire up when I go make a purchase. So I just walked out and went and got lunch somewhere else. But anyway, no, I didn't buy anything. And probably more surprising to me was that there was not, I think I was the only guy there. There was one other person behind me, and I know that they space them out or whatever, But there was one other lady who came in when I was about to leave who was about to get one. But it wasn't, the store looks normal. Like it wasn't this rush of customers. And I was expecting like, you know, Walgreens, pretty small parking lot, pretty small aisleways. I hope this isn't some stupid thing wrapped behind the store or whatever. It wasn't. It was the same traffic that you would get if you go to pick up pills for your kids or your wife or whatever. You waited behind like one other person and walked up to the desk and boom, you're in business. So, all right, Omar, what do you think about Shift Technologies? We've talked about this, Omar, before, not necessarily with you. Shift, I think LD's big on Shift, but I don't know what I think about those on-demand used car places. And I've said before that if I did buy into one, it would probably be CarMax. But CarMax is behind on their app technology. But CarMax is a winning setup, absolutely for sure. And while we're talking about cars, I do want to say one thing that you guys should research to build your own car thesis is the fact that the chip shortage. And so you take a lot of American SUV and trucks, which are, you know, for all the Tesla bulls out there, American SUV and trucks are still like the biggest category of cars in America by a mile. You cannot get a Chevy Tahoe. You cannot get a Ford F-150 right now. But guess where you probably could is on that used car marketplace. So rolling back a little bit, when I think of Shift and Carvana and CarMax, I think that used cars may have an opportunity to surpass new cars in some level this year, certainly on growth rate, because your selection of SUV and trucks is going to be a hell of a lot more there because you cannot buy a new one right now. So watch out for that. It could be worth playing. All right, guys. Let's see what we got. How are we feeling about Rocket? We're feeling mixed emotions. I'm not selling. I believe that the housing market has a lot left. And there's a ton of interesting stuff going on in housing. I believe, before I say that, I believe that mortgage rates are going back down. I can't find my TNP. I don't know what happened to it. Oh, there's the 10-year. Okay, so 1.682%. So don't forget, it peaked over 7, and now it's come back down. I am a Rocket customer as well, and I haven't refinanced for a number of different reasons over the past couple years. But what's cool is I get the emails when the rates drop. Then I keep getting them just because I know I like to get them, so I know what's going on. I got one today that said, you know, alert, interest rates just went down again. And Rocket doesn't do like spam emails that lie about it. They'll say stuff like interest rates are going up tomorrow, lock in now, or attention, interest rates just went down. So I think they just went down. So keep that in mind. Okay. All right, guys. I am going, you know what? There's a good question, JP, about Micron and Qualcomm and all those. I've got to run, but the chip sector is getting better every day. Okay, these sellouts are a good thing. Pick your favorite chip provider. Take a look at NVIDIA today, released a new announcement about what they're doing in the database side using AI. Get yourself a chip stock, the ones that you like the best. I'm in Taiwan Semi. I have promoted Micron a million times on this channel from a value standpoint, and I love NVIDIA as well, although I don't own it. If you buy ETFs, just buy the QQQ. It'll help you spread out, but you'll get all the best chip companies. Intel, AMD, NVIDIA are all in there. But pick a chip stock, guys, because it's turning very real. There is demand like we've never seen before. And I think that 2 months ago, the world thought it was a 1-year chip shortage and we'd all get past it. It's looking like it's a lot more than that. So jump in when you can. But anyway, guys, have a great day. Thanks for coming out for this whole thing. I really appreciate it. You can leave me comments below if you're watching this on the replay, and I always try to answer the comments. So I hope you guys enjoy that, and we'll see you the next time. Bye.